What is going on, live traders? Excited for tonight. We're about to get started, getting the sound check going. If you can hear me, type something in the comments. Let me know you can hear me. Perfect. Very good. Anmal Singh is going to be joining us in a moment. He is going to be leading the charge tonight. Triple threat event, 5 days. Tonight is stocks, very, very popular topic. Obviously, the market's near all-time highs. Was anybody in the live trader stock room this morning when Anmal cleared $4,000 with GE and Apple? Type in "was there." You were there this morning. Amazing job. And then Friday, I don't know if you guys were there, in the morning we have a live trader stock live room where we do gap plays. Most of the time we are done. Jared is done by 10:30 almost every single trading day, and he made 700 on Friday. Exciting to see. You can actually watch that. He put up a YouTube video. We're about to get started here, guys. Looks like everybody can hear me. Everybody ready for the event? Get excited. Trading with an Edge we're going to get deep into technicals tonight. You guys are going to love it. It's going to get you ready for your career with stocks. And if you're already trading, a lot of you guys, I'm recognizing some of these names in here already in our stock rooms. You get a little bit extra tonight. We are about to start. Just letting you know, tonight is stocks, tomorrow is Forex, same time, same bat channel. Wednesday is options, Thursday is mindset, and a lot of traders, I mean, we see the numbers here membership-wise, a lot of traders are super excited about Thursday night, the psychology behind trading. Don't miss that one. You guys can go to the original link and sign up for all of them. I'll put that link down there as well. A little bit later in the live event tonight, I'll make sure you guys have the link so that you can sign up for the Forex, the options, the psychology, and then a Q&A with Jared and Anmal on Friday at 6:30. That's going to be amazing. Fireside chat. Ask them anything you want about stocks, Forex, options, life, money management. They are ready. We have 2 more minutes. Let some more people join in, and we will get this started. All right, we're about to get started. Guys, put down in the comments how long you've been trading. Would love to know that. Don't be embarrassed if you've never traded. Okay, a year and 3 months. Great, Kevin. Oh, Antonio, sorry about that. I'm glad Amal answered that for you. 2 months paper trading. Nice. Anybody over 5 years trading? All right, Frank coming back. Welcome back. Good time to get in. Emmanuel, 4 months. Nice. This is good. This is a nice range. Okay, there's our first over 5 years. Very cool. Anybody over 10 years? Don't feel like if you've been trading over 10 years to be embarrassed to be in a training live free event. Everybody needs to go back to the basics every once in a while. And this training is a little bit more than basics, but it's always good to get back to your roots. You can get a lot of bunny trails trading. You can try this, you can try that. What I love best about live traders, I'm following them for a while now and have been in a lot of different courses, a lot of different trading rooms, and theirs is by far my favorite. And I am not just saying that. There's no BS, there's no fluff. They give you, well, Anmal's going to tell you a little bit more about those. To learn from mistakes, I recommend you print chart and learn from it. Absolutely. We're going to go over a lot of charts tonight, so just get a notebook out. Definitely take some screenshots if you want, no problem. Very cool. All right, guys, within about a minute, we're going to get this party started. This is a live event. You know, Johan, I'm not sure we're going to be uploading this anywhere. We like to keep these things super safe and secret, so you're not going to get Trading with an Edge uploaded to YouTube or anything. But towards the end of the event, I will drop a link there, and you'll be able to see. I won't tell you exactly what you'll be able to see, but you'll get some good charting, some really good. You want to review charts and technicals? I'll drop a link for you guys in this live event. It won't be seen anywhere else. Johan, you got the professional trading strategy course. All right. Yeah, let me. I'll go ahead and message you. We'll get you. We'll get you something there. For those of you that don't know, professional trading strategies, that is the top course, bundled course that is offered by live traders. It has everything. Jared Wesley, founder, he will definitely tell you that that is the only course you will ever need for trading. So yeah, we'll make sure you get that, Johan. No problem. 12 years futures and forex trading. Nice. Yes, New York City. A lot from it. Anmal Singh is going to be presenting today, co-founder of LiveTraders.com. He is the one that made the $4,000 this morning, this very morning, on Apple and GE. Who could use an extra $4,000? Just type in me. You can use $4,000 before 10:30 in the morning. Nice. Hey, Diane, how you doing? All right, Chris, I like it. Yeah, Kevin, no big deal. We got you. You are right, Frank. 400 would be good for starters. No, Jared did 700 Friday, but I think the day before he did 600. So, Hector, what's going on? Very nice. And I believe this morning, what was it in? It was in 9 minutes. 9 minutes, 4 grand. All right, guys, just a few more seconds. Amal's going to take over. He is going to blow your mind, make you guys a triple threat. We're going to start with stock threat tonight. You are going to become a threat to the stock market. All right, y'all, without further ado, LiveTraders.com co-founder Anmal Singh going over trading with an edge to make you a triple threat with stocks.
How's everybody doing? Morning, morning, morning. All right, hope you guys are doing. Just wanted to come out here and say hello. And I wear my passion right on myself, live traders. So wear your passion. I always wear what I do for a living. So I want to get started. And, I don't want to take too much time. Those who know me, welcome to the event. Those who don't know me, you'll get to know a little bit more about me and what we do here at Live Traders. So, I want to dive straight into the event. But first of all, just want to thank you guys for tuning in. I know it's a 6:30, on a Monday. A lot of people are, getting home from work or, just leaving work. Or some of you might still be working and you watch it on your mobile phone. So, first of all, just want to thank you guys for tuning in and for doing, whatever you needed to do to be here. It's not easy to take time out like an hour and tune into like a live presentation. So whatever you got to do to get yourself here, thank you. Because, there was over like 1,000 people who registered for the event. But obviously not everybody's going to tune in. Unfortunately, they're going to miss out because every time we do an event, we always record it and we always send out the recording. This time, however, I've chosen so far not to send out the recording. So those who've tuned in live, you guys are going to benefit from this. Those of you who are missing out on the event, didn't tune into it, unfortunately, you will miss out. And yes, Joanne will definitely send that to you, right? Since you're in the PTS course, as I said, you don't need to purchase anything. I'll send you the full course, the Trading with an Edge. So just drop an email to Evan or info@Live Traders. We'll send it over to you. But let's get started. So a little bit about me. I've been trading for about 9 years now. I started trading in 2010. Jared Wesley, a lot of you who know Jared, he was my mentor. So he kind of took me under his wing, taught me how to trade the markets. I was in college at that time. So I was in my dorm room learning how to trade. I attended a webinar that Jared was teaching for a pretty big firm at that time at Wall Street. And I attended one of his webinars and I was like, this is it. Because everybody was telling me how easy it is to make money in trading, right? Oh, make $1 million in 10 minutes or how to be a penny stock millionaire. I mean, there's so many advertisements that you see on YouTube and all that. But I always knew that it can't be that easy. If it was that easy, everybody would be doing it, right? And I really liked how Jared's approach came in because he came in and said, hey, it's a great business. You could do really well, but it's not going to be easy, right? It's going to be simple, but it's not going to be easy. So I kind of liked the real approach that Jared gave me. So he kind of took me under his wing, taught me how to trade, and I just got it. I just literally got it in like a year. It took me about a year to really get making money. For the first 6-7 months, I was kind of losing money, figuring it out. And then I touched base with Jared again, and we reviewed trades, and then he really gave me the rundown, right? He came to New York. I was like, hey, Jared's in New York. I will do whatever it needs to do, to get to meet him. I took him out for a drink, right? I brought my whole folder, and I think one of you guys were asking the question about, do you print out charts? I printed out my charts at that time, right? I took my whole folder to dinner with Jared, and I'm like, hey, tell me what I'm doing wrong, just tell me. And, he kind of looked over my psychology, the mindset, and a lot of the mindset related issues were holding me back. All right. And once I fixed those, things really changed. But I'm going to leave that for later. Let's dive in. We have a lot to cover today. This course is like a 3-hour course. So I'm definitely not going to be able to cover all of it today, but I'm going to cover as much as I can, probably an hour, right? And then we're going to have a Q&A at the end. Okay. And during the Q&A, you guys can ask me anything you want. So in the meantime, let's dive into the slides. Let's kind of go over the content. And once we're done with it, I will happily answer any questions, right? So during the presentation, if you type in any questions and I'm, not able to get to that, don't be ashamed. Don't think like I'm ignoring you. I'm not. I just want to get through the material. And at the end, I'll stay on as long as it's needed, 15, 20, 30, 40 minutes. And, we'll do some Q&A at the end. All right. So who's ready to get started? Type in a 1 if I should start right now. Everybody ready? All right, great. So turn off your phones, right? Turn off your phones, put them on silent because as everybody knows, I don't like distractions, right? Because if you're out here listening to me and then you're watching Facebook or Instagram on the side, you're doing all that, you're not going to learn anything. You might as well log out, right? So get your coffee, get started, take a pen and paper, and let's get going. All right. So trading with an edge. This is actually one of our courses that we sell on the website, but I'm going to give it to you today and just go over as much as I can in an hour. So let's get started, everybody. So before we start, just a standard financial disclaimer, right? All information that I'm going to provide is for educational purposes only, right? I'm not a registered investment advisor or anything like that. All I am is a trader. I trade from home. I make my money. I traded for a Wall Street firm in the past, and then I moved on to trading on my own. So again, trading in any capacity does involve risk, obviously, right? If you didn't know that, light bulb moment. Trading the markets does involve risk. And, it might not be suitable for everybody. And you should only risk that what you can afford to lose. In fact, I'm even going to go one step further, okay? I'm going to go one step further and say that it's not that you might lose money trading the markets. I'm going to go one step further. I'm going to say you will lose money trading the markets if you don't know what you're doing, right? And no matter how much you know what you're doing, maybe you've been trading 9, 10, 15 years, you're still going to lose money, right? Because there's going to be losing trades. But as long as you make more on your winning trades than you lose on your losing trades, that's what makes a trader. Okay, you're not going to win every single time. And anybody who tells you otherwise is lying. So let's get going to the next one. So, this course, we cover a lot of different things, right? We have the introduction chapter. We got the technical versus fundamental, different trading timeframes and terminology, the foundations we use, right? Different kind of trends, some examples of charts. Today, I think we should be able to cover at least, I think we should be able to get through this, right? The whole course is like 3 hours. So I think in an hour, I might be able to get through the first 3 chapters. So that's what we're going to be talking about today. All right. Introduction. So trading with an edge. Okay. So we're going to talk in this chapter about the truth about trading. Okay. The stock market basics. Right. But I want to first read a quote that's right here, written down below by Cynthia Kersey, right? The only opinion about your dream that really counts is yours. Okay? The negative comments of others merely reflect their own limitation and not yours. So I know in trading especially, there's a lot of people who really want to do this, but there's like friends, there's family, they always try and tell you otherwise, right? They say, oh, you got a nice job. Why do you want to leave that for trading? Or some ignorant person might say, isn't trading like gambling, right? They only have all these, negative opinions about the markets, and it's not their fault. They have these negative experiences because they don't know what they're doing, right? All they know is what they've been told on CNBC. So they really don't have an idea of what the markets are. So I don't blame them, right? And especially with friends and family, they don't like change, okay? I mean, people want you to change, they want you to improve, but deep down, your friends and family, everybody wants us to be safe. And it's not a bad thing, right? They don't want us to take risks. They want us to be safe. So that's one thing you got to understand. But the only opinion that counts is yours, because it's your life. It's not anybody else's, okay? All right, so the truth about trading. At its very core, trading is simply a game of statistical probability, right? All trading really is a game of statistical probability. It's just like a casino, right? You go to a casino, right? They give you drinks, okay? I mean, this time I was in Vegas, and funny part, not only drinks, they were even giving me massages. They had beautiful girls, standing behind, giving you like a massage while you're playing on the blackjack table or the roulette table. They're getting you free drinks. The reason they do that is because they know their statistical probability, right? Statistical probability basically means they know that, okay, in roulette, they got like a 1.2% edge, right? Or on blackjack, they have like a 0.6% edge. It's a very small edge, but they have an edge. Edge basically means that when they lose X amount, but when they win Y amount, which is usually X times 2, right? So they usually win a lot more than when they lose. So the casino's game, right, is to get you to gamble. They don't care what you gamble. They don't care how you win, how you lose. All they want you to do is to bet more. Because the more you bet, the more you're going to lose. So same thing in trading. Trading is also a game of statistical probability. So when you find like a method, a strategy, a tactic that works, And then you know that, okay, when it wins, let's say $200. When it loses, let's say it loses $100. So now you know when you win 2 times of what you're going to lose, correct? So by that statistic, even if you win half of your trades, heck, even if you win 40% of your trades, you're still going to make money. So at its very core, trading is simply a game of statistical probability. No matter how perfect a trading setup is, it could still fail, right? We've seen it all the time. Great breakout charts, breakout patterns, beautiful patterns, but it could still fail, right? And no matter how poor a setup is, it could still work. I've seen it a lot of times. New people come into the chat room there, the stock is going down, and they're like, "Oh, let me buy this stock." And I say it's not a good idea. And guess what? It bounces, it still ends up working. So in trading, no matter how poor a setup is, it could still work. How great a setup is, it could still fail. So the key to being a profitable trader is consistency, okay? Consistency. Can you do your winning setups over and over and over again, right? That's consistency. So approaching each trading day and each individual trade the same way every day, that's what gives us an edge, okay? So then proper money management and trade management, we simply let the edge make us money. So this is just alluding to earlier. I mean, let's just go over an example right over here. Okay, so let's go over an example here. So now let's say if on a losing trade you lose $100, okay, and let's say on a winning trades you win $200. So 2 times $200 is your average winner, okay, and $100 is your average loser. Now, can anybody tell me, quick math, how many times do I need to be right in order to be a profitable trader? Anybody? What percentage of my trades I can get right to be a profitable trader? So Unes says 33%. Okay. I'm going to wait. Anybody more answers? More answers? Again, I said this is going to be a workshop. I hope you don't think it's a free webinar that I'm just going to come in and do a sales pitch. This is a workshop, so I need participation. So Juan says 50. Grant says 33. Emmanuel says 50. Okay. Good. So, I mean, a lot of you are on the right spot. But let's do the math. So if I'm right 33 times and I make $200, what's my profit? I'm going to pull up a calculator because I'm horrible at math, but 33 into 200, you're going to make 6,600, right? Now, that leaves us with 67 times losing $100. Okay, so then we lose 6,700. So 33% won't make us money, but pretty close, right? 35% would, or 34%, because now check this out. 34 times I make 200. What do I make? Right? 34 times into 200, 6,800. Okay. And now I'm going to lose 66 times. I'm going to lose $100. What do I lose? 6,600. So net result plus 200. So again, theoretically, okay, even if you're right 34% of the time, we're going to make money. Now, realistically, that's not going to be the case, because realistically, you're going to have, commissions, right? Fees, right? Platform fees, maybe, your account fees and trade commissions, all that. So realistically, 34% would maybe turn you into a break-even trader and not necessarily, a profitable trader. But, right, that's the right amount in theory, right? So isn't that crazy? Like, I can be taking 100 trades. I just took 100 trades, guys. I can lose 66 of them and still end up being a profitable trader. That is what's called an edge, right? Your statistical probability in trading is what's called an edge. And this is why most traders don't make it in this career, is because all time they spend their time on what, guys? They spend their time on learning this new strategy, right? Learning a new strategy. Oh, let me learn this new pattern. Oh, let me learn this other guy's pattern or this other guy's strategy. All they're doing is learning strategies, patterns, indicators, strategies, pattern, indicator, and they're just going round and round in circle. They don't realize the reason you're losing money is because you do not have an edge. There's no statistical edge, right? That brings me back to the casino analogy. How do casinos make money? Casinos can give you free drinks all day long, all night long, and still make money. How? Because they know they have an edge. the more you play, the more you lose. Same thing in trading. If I have a system like this, where 40% of the time I can make $200 and 60 of the time I can lose 100, this is a profitable system. Now, all I need to do to make more money is do what? Take more trades, right, guys? If I just take more trades with this system, wouldn't I make more money? Right now, that's another way to scale. The other way to scale is saying, hey, instead of losing $100 in a trade, I'm going to risk $200 in a trade. Now look what happens. Now your winner becomes $400. So all you do to become a bigger trader is either take more trades or increase your risk. If you do that, you can just keep scaling, until your heart desires, basically. So let's get back to the slide. I tend to get off topic quite a lot, guys, so please bring me back because I do want to get through the slides, but, I like to talk, so I kind of go over the slides, and we're only in slide 1 right now. So again, now in order to get a solid foundation in technical analysis, all right, what we need is reliable trade and money management techniques, okay, along with the foundation technical analysis. So as you're going to see in the coming pages, there are many different trading strategies, right? There's many different ways to manage a trade. One guy can do trailing stops. One guy can just put his target and forget about it, right? One guy can take out at 1-to-1. There's many different ways to manage a trade. Now, your job as a trader is to choose one or two of these strategies, okay? Apply a simple and straightforward money management approach, and then duplicate this process every single day. The simple, organized, consistent trader will make money in this market. I don't know if I'm legally allowed to say that, but I can pretty much assure you, right, that if you follow the approach that we're going to talk about today, you will make money. It's not a question of if you're going to make money, it's just a question of how much. Okay, that's the only question. I haven't had a single trader who's taken one of our programs, right, is in the room, is doing exactly what I'm telling them and not making money, right? You might not be a billionaire, right, but you will make money. I can pretty much assure you that, okay? So the overcomplicated, unorganized trader generally quits out of frustration because they have no idea. One day they're making a lot of money, one day they're losing a lot of money, then they're making, then they're losing. It's just too much. And after a year, they either break even or they're losing money, and generally what happens? They quit out of frustration. Most people do, right? So keep in mind, the comments that I'm making are being made by me, Profitable Trader, and many others in the chat room, right? And I've been through the ups and downs this business provides us, right? And I've learned, quote unquote, the secrets, right, of trading success. Now, there are no secrets, first of all. There's just certain things that professional traders do differently than those who don't, okay? So let's get going here. So the basics of stock market, right? What is the stock market? So the market is basically the sum of all stocks, okay? However, in recent years, there's also been a great influx of ETFs, which are exchange-traded funds that track certain market sectors. So example would be like, the QQQ, which is the NASDAQ ETF. They're going to move, in hand with the NASDAQ, right? SPY, spiders, they move along with the S&P 500, okay? So they move with the market. They follow the market. We also have to acknowledge that not every stock is tradable, right? Some are penny stocks, right? Some stocks don't have enough daily average volume, right? Not have enough volume, be thinly traded, right? And then some are too expensive for most traders, like Berkshire Hathaway, right? BRKA. A shares are like $200,000 a share. So not many people are going to be trading that, right? So here's the estimated list of the current stocks in the market. So the New York Stock Exchange, roughly has about 3,000 stocks, okay? The NASDAQ roughly has about 2,500 stocks, right? The Amex, the American Stock Exchange, roughly has about 400 stocks. And then the OTC markets, the over-the-counter, which is where all the junk trades, about 4,500 stocks trade in the OTC market. So overall, there's about almost 11,000 stocks in the overall market, right? Then that's a lot of stocks, right? That is a lot of stocks. But don't get overwhelmed. It doesn't mean that, oh man, there's too many stocks. What do I trade every day? No. Because a lot of the stocks are not tradable, right? They're too thin, not enough volume. You can't get in and out of them easily. So not every stock is tradable. And some are penny stocks. I personally don't trade penny stocks. Now, I don't mind trading penny stocks if they have a pattern, right? if they meet one of my strategies, I'll probably swing trade them. But I typically don't trade penny stocks just because they're at a penny for a reason. Okay, there's a reason they did not qualify to get into the NASDAQ exchange. There's a reason why they're at OTC, because junk trades in OTC. Okay, so the tradable stock market is likely like less than 25% of that list, or roughly about like 2,000 to 2,500 stocks are actually tradable, right? The good news is that there's still plenty of opportunity each and every day, but only if you choose the right stocks. And I'm going to tell you what we focus on here. There's two different approaches at Live Traders, okay? One is income generating, okay? So income generating approach is basically day trading, where you're day trading every single day to collect income. That's the money that you live off, right? That's your income. That's day trading. The other style we teach is called wealth building. Wealth building is swing trading. Swing trading means you hold the stock for a day, 5 days, a week maybe, sometimes maybe a couple more than a week, right? That's swing trading. That's called wealth building style. So day trading you rely on for your income, and swing and wealth building you rely on to grow wealth. So you take an account, and every year you're going to grow it into a bigger and bigger and bigger account. It's compounding. That's what Tony Robbins talks about in all of his money books. So again, here's a chart of the S&P 500, SPY, okay? Monthly chart of the spiders, okay? Now, you see here, there's two emotions in trading. There's only two. There's no other emotion, guys. There's only two emotions in trading. One is greed, right? In greed, the buyers are in control, okay? Buyers are in control. It keeps moving higher. That's greed. And then the other emotion in trading is fear, okay? Fear is when the markets are going down, right? Sellers are in control in a fearful market. Buyers are in control in a greed market. Now, fear is always stronger than greed, okay? Always stronger. But we're going to dive into that a little bit. But what I'm trying to say is that the stock market, okay, the stock market is not at all about stocks. What most people think, it's not about that. Stock market is not about stocks. It's really about human emotion. It's someone else's opinion what a stock might do versus your opinion of what the market might do. Okay? And both of those emotions, as I said, are driven by fear and greed. These are the most powerful emotions in the market, right? Fear is always stronger than greed. Because you can see here, greed, what's happening in greed? Stock goes up, goes down, goes up, goes down, right? And slowly grinds its way higher. Look at what happens in fear. Straight tankage, right? No pullback, just straight down. Fear is always stronger than greed. And that's why there's a saying in trading that stocks take the staircase up and then they take the elevator down. Fear is always stronger because greed is not that strong. Because in greed, people have to put more money in to buy. Fear, people are like, holy smokes, I just want to get out. And they start hitting market orders, stop loss is here, stop loss getting triggered, and that causes further decline. Okay? But there's only two emotions. Once you learn how to decode these two emotions, everything starts to make much more sense in trading. Once you learn how to decode the emotions in trading. So, lost my sound. Sound should be good, I think, right? Because can anybody give me like a 1 if the sound is all right? If the sound's not good, and I'll restart. Sounds good? Okay, good. So sounds good, right? All right, perfect. So Emmanuel, you might want to log out and back in. Oh, but he can't hear me, so let me type it in here. Emmanuel, you might want to log off and back in. All right. So let's keep going. So now the charts in trading, they tell us exactly what to do. Okay? Charts tell us exactly what to do. Okay? But here's also another thing. When one side takes control for too long, making the chart extended, there's usually a reversal. Usually a reversal, right? And we can generally predict reversals by using specific criteria, such as, some of the concepts we teach in our courses is like we teach increased volume, right? Bottoming tails, distance away from the moving averages, the size of the bars, numbers of the bar, support and resistance areas. And, technical analysis trading uses past price action to predict the future movement, because the stock market is made up of what? Two emotions, right? And because the stock market is made up of human emotions, they tend to repeat themselves over and over again, right? A lot of times irrationally, but it's still funny. Like, I still get surprised. Like, I've been trading 9 years. I still find myself getting surprised of how these same patterns repeat over and over and over again. And I found out the reason why these patterns repeat over and over and over again is because no matter what happens, humans are still humans, and they will continue to have human emotion of fear and greed, and fear drives it down, greed drives it up. That's why these patterns repeat over and over again. So just some of the things here we talk about in our courses is, see how this, okay, right over here, is, look at this blue line is the moving average, okay? Look how the stock is slightly above the moving average, it's pull back. Slightly above it, pull back. Slightly above it, pull back. So it's never really extended away from the moving average, right? So this type of trend can continue going up forever and ever and ever. Now look here how it gets extended away from the moving average. Look what happens. You get a pullback, right? Same thing here. The market is moving up closely to the moving average, right? That's a power trend that can go on forever and ever and ever. Now here, we already knew that there's going to be a reversal. Why? Because look at this. It got extended, and look at where the moving average is at that time. Moving average is still right over here. So look at the distance away from the moving average, right? Combining that it's sold off to a prior area of demand, okay? Now, I personally don't like to use the terminology of support and resistance. I kind of like to use demand and supply, right? Because support area is basically demand. There's going to be demand there. Resistance area is going to be supply. So now you can see here, it got extended from the moving averages. The distance is big, going into a prior area of support. And this is where the stock has previously bounced, right? Last time it came down here, look what you got. Nice uptrend, right? So came down here, you're probably going to expect the same situation to happen right over here. Now you combine that by an increase in volume. I call this like the volume crescendo, right? This is how we predict the future price movement, right? This is how we predict future price movement. You're getting extension away from the moving averages, going into an area where it previously bounced, increase in volume, right? Showing that this move is over. And that's where you got that nice bounce from, right? So this is how the charts tell us exactly what to do. And if you don't know charts, don't worry about it. We're going to talk about that today. By the way, is everybody still following, or am I going too fast? Let me know, guys. Is the speed okay, or am I going too fast? I don't want to go too fast and you guys are like, oh, what just happened here? Just, I don't know what we're talking about. Speed good? Okay, good. Perfect. Just checking. Also making sure you guys are not sleeping. All right. All right. And there's a lot of people watching this event on YouTube also. I kind of streamed it on YouTube just for a lot of people who didn't quite were able to tune in. So don't worry. I'm also watching the YouTube comments. So make sure to type in the YouTube. I'm definitely watching that, and I'll respond to your questions also. Okay. All right. So now check this out here. Another chart. See how this is a resistance area or supply. This red line, that's supply. Okay. Now you see here, every time it gets to that supply, the market pulls back. Every time we get to the supply, the market pulls back. Every time we get to the supply, the markets pull back. Right? So we clearly know that that's where the sellers are. Okay? That's where the supply is. Now here's the thing. We know that that's where the sellers are. So now, just a quick question. What's going to happen, guys, if the price gets above where it never could get above? What does that mean, right? Well, what does that mean? What that basically means is the sellers were right over here. Price breaks out. The sellers are no longer there. And look what also is happening at the same time, right? Not only the sellers are right there, sellers are standing firm. This is their ground. They're standing firm. But now look what's happening with the buyers. Buyers were here, right? Then look what happened. Buyers came in over here. Then look what happened. Buyers came in over here. Then look what happened. Buyers came in over here. So this is sellers are going to lose the battle because the sellers aren't stepping down. Sellers are like, we're going to sell right here. And slowly the buyers are like, all right, we'll buy it here. All right, we'll buy it here. Right? So the buyers are constantly doing what? They're stepping up. Right? So the buyers are stepping up. The sellers are exactly where they were before. What's going to happen when the sellers go? right? Buyers are going to buy this thing up. And that's what's called a breakout. So a lot of people, I think the problem that I find with technical analysis and these online education firms is that they'll teach you a pattern, right? Oh, here's a breakout, just buy it there. But why? Why? You want to know why those patterns work. Why does a pattern work, right? What's the thinking behind it? What's really going on? So what's going on is the buyers are stepping up. Sellers are right here. Sooner or later, the buyers overcome all the supply. The supply is gone. Look what happens. Prices move all the way up, right? Prices move up. But now also look what happens. Prices get extended, right? Because they did not grind up. Like this was a grind up. It can keep going forever. Prices here did not grind. They just shot up. So at that point, what would have happened is you would have seen an increase in volume. All right. You would have seen away from the moving averages. And then suddenly the trend snaps. The trend snaps, market pulls back. And as the market starts pulling back, people who didn't take profit, they start selling. Right? People who were trailing their stops, they get stopped out. Right? And then sooner or later, as the market keeps going lower, fear kicks in. This is a 1929 crash, by the way, okay? I'm showing you the 1929 crash. Fear kicks in, and where stocks were taking the staircase up, now they take the elevator down. All right, elevator down, because it got extended. Fear kicked in. But now look what happened. The way it moved up, the same way it moved down without waiting, okay, without any trend, without any grind, that was a climactic or parabolic move, as we called it. Too extended. Right, too extended. But now also look where it dropped down to. Previous area where the move started from. The prior area of demand. Look what happened there. The prior pivot low. Look what happened. Buyers stepped up yet again. So if the buyer stepped up in the past, they're likely to do it again. Prices moved up nicely from there. And then right over here, same thing happened. Sellers are like, all right, that's it. That's our level. That's where we're going to sell. Right? And buyers are here. Buyers are buying. Right? Then the buyers step up right over here. Buyers step up right over here. So the buyers are stepping up. Sellers are still exactly where they were. So when the buyers eat up all the supply from that selling, what happens? Causes a breakout and market trends higher. Okay? Market trends higher. Now look over here. Look over here. One of the signs we mentioned. Volume peaking. Right? Look at the volume. Volume peaked right as the stock moved right over here. Okay? So you should be able to see my... Let me pull up a dot. All right. Now you can see it. A little dot right here. Okay? So see here how the volume peaked up. Right? Got extended, which is what we talked about in the last slide. The volume extended. Okay? Volume extended. Prices are moving up. Look what happens. All right? Look what happens. Got a decline. That's ending volume, which we talk in our courses. So this is just what I'm trying to teach you. Now, look what we've just done, okay? We don't even know the company's name. We don't know what their CEO does. We don't know their P&L ratio, right? We don't know their, the PE ratio. We don't know what the management company does. We don't know what Kramer has to say. We don't know the news. All we're making our decisions are based upon a chart. Right? Because charts tell us what to do. Fear, emotion, no matter what the stock does, goes down, goes up, everything is represented on the chart. So we don't need to focus on this fundamental stuff or any other things that people talk about. Okay? All right. So, why trade stocks? Okay? So the reason why at Live Traders, our main focus is stocks, okay, followed by options and Forex, but the main is stocks. Right? And the reason why we love stocks more than anything else is because due to the choices we have, right? Due to the choices we have available to us as stock traders. Okay? Futures and Forex have a handful of instruments, right? There's only a handful of currencies or futures you can trade. So there's not always an opportunity, right? There's not always a pattern available. There's so many stocks, right? I said about 3,000 tradable stocks in the market. So there's always an opportunity somewhere. That's why we prefer stocks, right? I do love Forex too, but stocks is where I started the first. And then I moved into Forex later down my career. But stocks has been my bread and butter for a long time. So, however, with stocks, obviously, there's always something moving and always something with a technical pattern, this choice, right, offers us money-making potential every single day, right? There's a lot of stocks, a lot of companies to choose from. There's always something that has a news, an upgrade or a downgrade or earnings or a sector report that creates opportunity. There's always something going on, right? That's why we focus on stocks as primary day trading instrument than anything else. But what I'm going to talk about today, right, the same concepts you can apply whether you trade Forex, futures, options, even like cryptocurrencies, Bitcoin, because technicals are technicals, right? No matter what you trade, it has only two emotions, fear and greed. What we talked about, right? Anything you trade has two emotions, fear and greed. So if you have a technical chart, the same patterns will apply no matter what you trade, okay? So what's our goal? So our goal obviously at Live Traders is to be transparent while helping educate traders on the proper technical patterns as well as proper mental approach to the business, right? That's my goal here. That's Jared's goals. That's my goal, is to educate traders on the proper techniques, proper mental approach to trading in this business, right? And I understand there's a lot of different ways to succeed and a lot of different ways to make money. And, we're going to examine some of those styles in this course. But also our main objective is to showcase the importance of money management, trade management, and of course the role that psychology plays in being an effective trader. I found that many trading education firms, they place like too much emphasis on like charts, right? Oh, look at this beautiful strategy. Look at this beautiful pattern, right? Look at this pattern. Look at this candlestick. And they talk too much about that, when in reality, chart patterns are way less important than having the proper mindset, the proper psychology, the proper trade management techniques, the money management techniques, and more importantly, the statistical edge, the statistical probability that I talked about. Because it's funny, I've been around the block. I'm not like starting off as a moderator. When I started trading, I was in the same boat as most of you guys. Like, I was attending webinars, seminars, buying courses, watching YouTube videos. And here's the funny part. And I've noticed that as well. Like, even on our YouTube channel, I post a video on like VWAP, right? It gets 18,000 views. Okay, I post a video on like a chart pattern, 20,000, 30,000 views. Then I post a video about like psychology, mindset, or, like something about stop losses, half the views, So it's like people are following the wrong thing. They want to learn pattern. Let me teach that pattern. But what good is a pattern if you can't follow it? What good is a pattern if you can't not trade it? Right? You can learn the best pattern in the world, but if you can't get yourself to actually push the button and trade it, and then when you even trade it, stay in the trade until you get your target, what good is a pattern if you don't have the right mindset, right? So as I go through this course, please pay attention to not only the slides, but to what I'm actually saying, okay? Because I'm talking from real experience, live trading experience, all right? This course obviously is not being taught by armchair warrior. There's a lot of armchair warriors in this trading, right? You'll see a lot of webinars that people want to teach you. Most of the people are armchair warriors. They're sitting on their chair, pushing the button, saying, oh, look at this, I bought it here, I sell it here. It doesn't work like that. That's demo trading, okay? Real trading is very different. So the course, obviously, I'm teaching you, I've earned my place in the markets, okay? I've earned it. Before I started Live Traders, I was trading for a proprietary trading firm in New York City, right? Trading for them. They had like 10 levels. Level 1, you get $50,000 to trade with. Level 2, you get $75,000. Level 3, you get $100,000. Level 4, you get $200,000. Level 5, you get $300,000. All the way to level 10, where you get $10 million to trade with. Okay, and I think I got to like level 7 or level 8, which I had, I think, $2 million to trade with. I got to level 8 in about 8 months. 8 months. Okay, I think I was the first person actually at their firm to get level 8. Most people were stuck at level 4 and level 5. I was at level 8 in like 8 months, every level a month. At level 8, I had to make, I think it was $4,000 a week was the goal at level 8, right? And I hit it. And that's when I started teaching, because I was like, man, everybody wants to talk, but nobody really wants to trade, okay? So, it might sound like conventional, but in truth, it's very common in this trading industry. I've noticed it. Like, there's a lot of people who are probably have better videos than I do, right? Make better videos, have better marketing, have, just a lot better things going on. I'm not a marketer. I'm a trader, so I might not be as polished as you guys want it to be, but, it's the truth. Okay? So let's dive in. Before I dive in, let me just take a sip of my water. All right. So technical versus fundamental. What's the difference? We're going to talk about in this chapter. What's the difference? We're going to talk about the fallacy of blue chips, and then we're going to summarize everything. Now, here's a really awesome quote. Okay? I don't know who made this quote, but I heard it first from Jeff Yates, who's also one of our Forex Trading Room moderators. Proficient traders are a dime a dozen, but truly profitable traders are few and far between. That's the truth in this industry, right? Talking is very easy. Doing is a completely different ballgame. So proficient traders are dime a dozen. They know the charts. They know all the strategies. They know all the patterns. If I mention like a pattern, they would know the name of it. They would know where to get in, where to go out. They would know every single thing, right? But truly profitable ones, not many, right? Not many. All right. So although this, the line has become slightly blurred in recent years due to the overall access to information, the main difference between a technical trader and a fundamental investor is the tools they use to meet their objectives. Okay? So a technical trader relies on, candlestick charts to make accurate, informed decisions about what the future price of a stock is likely to be. Generally speaking, technical trader does not care, what the internals look like, what the credit risk is, what the sales of the company is, the management team, PE ratio. All that is irrelevant for a technical trader because, again, as I said, the charts tell us everything we need to know, right? Where's the supply? Where's the demand? If there's no supply, what's going to happen? It's going to break out volume, okay? So all of that, management, sales figures, PE ratio, new buyout, companies doing really good, doesn't matter. Everything we need to know is on the charts because the charts are the flow of money, okay? It's funny when I hear people saying, oh, look at that stock is going down, that stock is dropping, that stock is going down, look at how fast it's going down, right? They're always talking about how much a stock is going down, and they say, oh, the stock is, overvalued or undervalued. Oh, this is going to be ripe for a bounce. The stock's going to move up beautifully here, right? It's funny because people say, oh, look at this. Even Bitcoin, while it was going down, what were people saying? Oh, Bitcoin's going down, but don't be afraid. People are buying. Institutionals are accumulating. Institutions are buying. Well, if they were buying, okay, it should technically be going up, not down, okay? So they are not buying because charts represent the flow of money. If the money is flowing to the upside, the stock's going to go up. The money's flowing to the downside, stock's going to go down. That is it. So don't think that there's some big conspiracy theory going on as the stock's dropping. Oh, educations are accumulating. Well, no, because the reason it goes down is because of selling. Okay. So why do I talk about flow of money? Because technicals are powerful, right? The charts don't lie, but people do, right? How many times have you seen an article on Seeking Alpha? How many times have you watched Kramer say, oh, look at that, buy this, buy that, right? People can lie to you. Charts don't lie. Charts are charts. Statistics don't lie. Numbers don't lie. Everything else can lie. Okay? And you've seen it. CEOs go on CNBC all the time to pitch how well their company is doing, regardless of the truth. They have an agenda, right? Remember Enron? Anybody? Remember Enron? Enron declared bankruptcy, right? They were the darling of Wall Street. They were darling of Wall Street. Always going up. The stock is, going up there. And as it was going down, what was happening? As the stock was going down, the company's management, the CEO, the president, they were all coming up on CNBC saying how great they were, right? New deals being announced. If you were a best accountant, you would open their books and you would see, oh, wow, their books look great. The PE ratio is great. The book's looking good. Their sales are growing. But it's all bullshit. It was all lies, right? It was fake numbers. So what are you going to get by actually, looking at sales figures, their books, what the management's saying? Doesn't mean anything, right? Because, we've seen it all the time. So the fundamental investor, on the other hand, cares very much about the inner workings of the company. So that's the difference. Technical traders give us the charts, that's it. Fundamental traders, they need to know everything about the company, and that's the main factor of how they choose their stocks, right? Technical analysis is far simpler, very specific at the same time. It's way more accurate than fundamental analysis can ever hope to be. Okay? And I see it on YouTube all the time, people saying, oh, technical trading is this, fundamental is the way to go. Hell no. Because you could spend like days, weeks, months researching a company, right? Their management, their PE ratio, everything. Technical trader, I'll pull up a chart, tell you 2 minutes what's going to happen. 2 minutes. Okay? And very specific. Like, here's where we get in, here's where we get out. If you're wrong, here's where we get out, right? And that is because of what I covered earlier, flow of money. Because here's the thing. If somebody buys a stock, somebody sells a stock, what's going to happen, guys? Let's go to the whiteboard. So everybody knows time and sales window. On your trading platform, there's a window called time and sales, or market level 2 data, market depth. So that shows you the transactions, right? Somebody bought, 100 shares at 32, right? Somebody bought 200 shares at 32. Somebody sold 500 shares at 31.99. You see it on the time and sales, right? So every transaction that happens on a stock, is coming in on a time and sales. So every transaction creates a tick, right? And every tick creates a candle. All the ticks, when they come together, they make a candle, right? So you get time and sales, all those ticks come together to form a candle, right? And then their bunch of candles come together to form a pattern. And then we use those patterns to create strategies, right? And then we use those strategies to create tactics, and that's how we make money. Everything that happens, buying, selling, all that does is they create a candle, and then a bunch of candles come together, they create a pattern, and then the pattern is what we use to create a strategy, and then we use that strategy to make money. That's it. That is trading in a nutshell. Okay? That's trading in a nutshell. And I want to go over a quick joke, I want to go over a joke, but I'll go over that later in a little bit. So check this out. From 1970 to 2005, okay, there were 355 mutual funds. 355. Right? This is your so-called professionals, right? Out of those 355 funds, only 9 of them beat the market index by more than 2%. Only 9. So if you just took your money, put it and bought the market like S&P 500 or NASDAQ, you would do better than 99% of the fund managers. Seriously, like you could buy S&P 500 Qs and you could beat 99% of the hedge fund managers. Because out of 355 funds, only 9 beat the index by more than 2%. And here's the funny part. If you're thinking, oh, what if I invested in one of those 9 and I made 2% more than the market? Here's the funny part. Okay, here's the funny part. Most of the funds charge a 2.5% management fees. Okay? Most of the funds charge 2.5% management fee. So if they're beating the index by 2% and they're charging you 2.5% fees, how's it going, Daryl? So 2.5% is what the fees they're charging. So you're actually losing money by putting it with a hedge fund manager. 97.5% underperformed the market average, right? And that is what your so-called professionals are, right? I see a lot of people now coming into trading world who used to have a hedge fund or mutual fund background. They're like, oh, learn from me. I'm this mutual fund manager. Really? Let's see your track record, because I could just get better returns by investing in the market in general. These are the so-called professionals. And these are your professionals that graduated with a Harvard Ivy League, degree. These are the people that have tons of capital, right? Tons of reports. They got tons of analysts working for them. They have tons of interns working for them. They have a lot of contacts with banks, right? They have way more access to information than you would, because all you're going to do as a fundamental trader is read articles online, which have been read by somebody else, right? Probably read by thousands of people, okay, and you think you're going to read those articles and suddenly become a fundamental trader? Not going to happen. If these people, Ivy League educated traders, right, hedge fund managers with tons of staff, tons of access to information, if they can't beat the market fundamentally, how could you even expect to? Okay? And most of these funds charge 2% off your principal for management and 20% off your profits. So even those 9% that beat the market, you're still going to pay them money, still going to underperform. It's crazy. It's crazy. People still invest money in mutual funds. You can make a lot more money by learning how to do this and just doing it by yourself rather than giving it to a hedge fund manager, right? And a ton of people at Live Traders do it. I mean, we have this beautiful swing trading newsletter that Jared makes every single week. That will show you exactly what we're trading. Follow along. You'll see. We'll get 10 times the market return every single year. All right. So why is technical analysis superior? Right? Every good technical trade has 3 essential things. An entry price, right? Every single trade we get into, we need an entry price. Where are we going to get in? We need a stop loss price. If we're wrong, where do we want to get out, right? As I said, remember the first thing I said when we started this presentation? Let's say if you lose $100. If you win 200. So now we have to have a stop loss for that, right? Otherwise, it could keep going against us. Instead of losing 100 that we planned for, you could lose 200. Now, the model that I described won't work if you lose more than what you plan on losing. So we need a stop loss. And then we also need a target area. Where are we going to get out if you're right? We're buying this breakout, let's say. We're getting in here. That's our stop loss. Where are we going to get out when we're right? This is our target, right? So every technical trade must have an entry price, a stop loss price, and a target price, okay? Without any one of these things, there is no trade. No trade. If you don't have a stop loss, do not trade. You're not a trader, you're a gambler. Without any one of these things, there is no trade. There's one of the biggest differences between a short-term and a long-term traders, right? That's the biggest difference between a technical trader and a fundamental trader. Because too many fundamental investors, they have no idea what their target is, right? They get into a stock, they love the company, they buy the company, but they have no idea where they're going to get out, right? And they also don't have any idea where they get out if they're wrong, right? You know the approach that Warren Buffett teaches, buy and hold? Doesn't work anymore, guys, okay? There's a reason Berkshire Hathaway is still where it was a while ago. Buy and hold is not a strategy, okay? Buy and hold is not a strategy. A lot of times what ends up happening with fundamental traders is they're not actually buying and holding. What they're really doing is they're buy and hope, right? Buy and hope is what they're really doing. It's no buy and hold, it's buy and hope. Because they have no idea when they're going to get out if it goes against them, right? Let's say I buy a company, I love the fundamentals, beautiful technicals, beautiful fundamentals, I love the CEO, everything, and I buy the company. But what if it starts going against me? Fundamental traders don't get out. They just keep holding. Technical trader, we might say, oh, it's going down. Let me just get out under support, right? Oh, starts moving up again. Let me get back in it. And now we're going to ride it. So we're going to stay away from the pain, okay? So, the fundamental traders are basically allowing their emotions to invest for them, right? They will only exit when the pain of holding is more than they can handle. This means virtually all of their money is at risk. Whereas a technical trader has a specific amount that they know they will lose when they're wrong, right? Technical trader, every single trade I get into, I already know what I'm going to lose if I'm wrong. I already know because I already planned it out with the stop loss. I already know. Fundamental trader has no idea when they're going to get out if they're wrong. Here's a joke that I wanted to go over. So, all right, here's a joke. If it's funny, type in a 1. If it's not funny, don't worry. I'll skip to the next slide. I won't take your feelings, okay? My feelings won't get hurt if you don't find it funny. Maybe you already heard it, but, So the joke is, a fundamental trader and a technical trader go together for a dinner, okay? They order a nice steak. Brian already finds it funny. I haven't even started the joke yet, okay? But, so fundamental trader, technical trader go out to have steak at a dinner place, right? The server brings their, steak knives. They're cutting their steak, and suddenly the fundamental trader is cutting his steak, and suddenly the knife slips out of his hands, goes straight up in the air, right? The fundamental trader, technical trader, they're both watching the knife go up in the air, right? And the knife comes right back down, right? Because everything goes up, must come down. So the fundamental trader's knife is going up in the air, comes right back down. The fundamental trader is watching the knife come down, and bang, it stabs him in the foot, right? The technical trader asks him, "Hey, why don't you get out?" Right? Why don't you move your foot? You're watching the knife go up, you're watching the knife come back down to about to hit your foot. Why don't you move your foot? What does the fundamental trader say? The fundamental trader says, "Oh, I thought it'll go back up." That's what most fundamental traders are like, right? That's what most fundamental traders are like. Oh, I thought it'll go right back up. Only 2 people found it funny. Okay, I guess I need to work on my jokes. John, all right, 3, 4 people. All right, good. Now I feel better. Okay. That's what most fundamental people do. Oh, I thought it'll go back up. Whereas technical trader, what are we going to do? We're going to move our goddamn foot. We're not going to stand and get hurt. We're going to move our foot, right? That's the difference between fundamental traders and technical traders. All right. The fallacy of blue chips. But how are we doing? Are you guys still here? Have I lost you? Are you guys still here? I hope I haven't lost you. I know there's a lot that I'm covering today. Yeah, just like Bitcoin. So Adrian on YouTube says, just like Bitcoin. Yeah, right? Just like Bitcoin. Right? Bitcoin went down from 20,000 to 3,000. And what are people saying? Oh, it'll go back up. It's going to go to 100,000. But hey, why don't we get out while it's going down and get back in when it starts moving up? But no, they don't want to do that. They just want to hold on. Well, so be it. Right? So be it. So, all right, good. So I haven't lost you. So Frank's paying attention. Robert's paying attention. Permjeet's paying attention. Who else is paying attention? I need more people to pay attention. Otherwise, it's like, who am I talking to? All right. All right, good. Good. Okay. So let's keep going. So don't be fooled by your ego, all right, and what the news is pitching. Don't be fooled by it. All right, here's some facts to consider. The news media and the so-called pros on TV are not your friend. Kramer is not your friend. Fast Money, they're not your friend, right? Anybody on TV, they are not your friend, okay? They are all pitching an agenda, okay? They're all pitching an agenda. Your broker, he makes his living off your fees, right? Brokers don't care if you make money or you lose money. The brokers make their money off your fees. As long as you keep trading, they're fine. They don't care if you lose or win, right? As we also talked about, most professionals underperform the market, okay? And yes, even blue chip stocks that everybody loves gets crushed, okay? So what's the lesson? The lesson is don't let your ego take over, right? A quote from Top Gun, right? Don't cash checks. What was that? Don't write checks your body can't cash, right? So don't let your ego take over. As technical trader, we have to stay objective, okay? We have to stay objective. Stock's moving up. Great. Let's stay in it. Let's ride it up. Starting to move down. Let me get out. Let me reevaluate. Right? Objective. Right? Stay objective. Okay? Don't let your ego take over. You lost so much money to those professionals. I hear you. Everybody does, man. Everybody does. Because if they were really a professional, wouldn't they do it for themselves? Why do they need your money? They'd rather play with fees, right? They would rather collect the fees than do it themselves. Okay? So you have to use common sense and make sure you're not letting your ego write checks your bank account can't cash. Top Gun. All right? I love that movie. So this is why charts are so meaningful, because they're actual flow of money. They don't lie, but people sure do, because people have agendas. Okay? All right. So anybody know what this stock is? Right? This stock went down from $60 to $5, okay? And then back to 26 in 15 years. I'm going to give you a hint. It's a Dow 30 stock. That's your blue chip, right? That's the blue chip stock. Hey, buy blue chip companies. The blue chip companies do well. Blah, blah, blah. This is the blue chip stock, guys. Okay. From 60 went down to 5, went down to 26. All right. So Eric says it's GE. We'll take a look at it in a little bit. I'll give you the answer shortly. What about this one, guys? Anybody know what this stock is? Anybody know what this stock is? I mean, it did have a 10-to-1 reverse split, right? This stock did have a 10-to-1 reverse split, but it went down from $550 down to $9.70 before eventually going back to $53. Okay? Again, but it's a blue chip stock. You know, Kramer said buy. Kramer told me to buy it. People at Fast Money were telling me to buy. It's a blue chip stock. Right? I signed up for a newsletter on thestreet.com and they said, you know, it's a blue chip. You should buy it. There's your blue chip stock. All right, good. So some people are saying Intel, AT&T. Some people are saying Citigroup, Apple, GE, AIG, GE. Okay, good. All good guesses. I'll give you the answers shortly. And here's another one. All right, here's another one. Went from $1,400 to $55.65. Okay? It's a blue chip stock, guys. It's a blue chip stock. Okay? All right, here's the answers. Let's see how you guys did. So correct. The first one is GE. By the way, in the slide, it shows it was at $26. It's actually down at $9 today. But it's a blue chip stock, Anmol. General Electric, you know. It's at $9 today. By the way, we made money shorting it today in the trading room. I don't know if you guys were in there, but those of you who were in the trading room, we actually shorted GE this morning in our trading room, and we made money on it. I'm going to show you the trade later on. I made about $2,000 on that trade this morning in our trading room. We called it, traded it live in the trading room, called it before the trade even triggered, with the entry, with the stop, with the target. Okay? It was a good short play for us this morning. But it's a blue chip stock. Why do you want to short blue chip? Well, I don't care. It's going down. All right? The second one was Citigroup. Right? General Electric, founded in 1892, $261 billion market cap. Blue chip. Citigroup, founded in 1812, $162 billion market cap. Blue chip. AIG, 1919, $76 billion market cap. It's a blue chip. But guys, it doesn't matter if it's a blue chip. If institutions are selling, it will go down. And the chart will tell us that it's going down. Right? You can read all the company fundamentals you want. Doesn't matter. So if you did not have some form of a stop loss on these blue chip stocks, it's possible you would have lost the majority of your investment. Right? Because you're not going to stay in it until it comes back up, right? Because when the pain gets too good, the pain gets too great, fear kicks in, and you're going to sell it right at the dead low. It's just how it works. Okay? And let us not forget about the past. Remember Bear Stearns? Remember Enron? WorldCom? All these were blue chip stocks, and they had upgrades before they went bankrupt, guys. Okay? Those of you who followed upgrades. And it was funny, I was watching this video on YouTube. This guy was pitching how to trade news. You can't trade news, guys. It's bullshit. Right? All these stocks had an upgrade before they went down. All these had an outperform rating before they went down. All of them had a buy rating by analysts before they went down. The CEOs were on CNBC pitching how great their company is doing. Right? They had the perfect fundamentals. But it still went down. But you could have seen it on the chart doing this. Breaking through all support areas. You could have seen it on the chart. Not on fundamentals. Right? So what I'm really trying to say is that don't get fooled by good fundamentals. Because most of these companies had good fundamentals. Until they didn't. Right? A technical chart represents the flow of money. So follow it. Let it tell you what is really happening. Not your ego. Not some fundamental based analysis. Let the chart dictate. So we've seen company miss earnings estimates and move much higher. We've seen some exceed their earnings estimate and still go down. Right? We've also seen good news be sold and bad news be bought. Haven't you seen it sometimes? Haven't you seen it, guys? Like sometimes the stock has a bad news or they miss their earnings, but it still goes up. And sometimes stock they miss the earnings estimates, technically bad news, and they still go up, right? So what's the lesson here? The lesson is let the charts guide you, okay? Metin, I don't think this is going to be recorded. I'll see if I can get you recording, but I'm not sure we're recording this one. Because again, as you can see, this is not any free workshop or a free seminar, right? I'm actually kind of going in deep here. So again, let the charts. Oh wow, it's already been an hour. I hope you guys got your coffee, right? It's already been an hour. We haven't even got started yet. So let the charts tell you what to do. Don't mess around with reading hundreds of pages of nonsense bullshit about upgrades and downgrades or who the new CEO is or how he's doing. That's like choosing the next Michael Jordan in the draft. It's very difficult. Let the chart be your guide. This chart right here told us everything we needed to know about this stock. The entry, the stop, the target. This trade lasted 5 days and moved 62% or $11.50. Most people are happy to make 8% a year. Okay, so again, check this out. Sellers are right here. Sellers are right here. Can't get above it, right? Supply. Supply is right here. Sellers are right here. That's supply. Supply right here. Sellers right here. But look what the buyers started doing. Stepping up. Stepping up. Stepping up. Sooner or later, the buyers eat up all the supply. The sellers are gone. Stock moves up. You could have bought the breakout. If you didn't buy the breakout, this is our live traders technical strategy, right? Live trader technical strategy, the 3-bar play. We cover it in pretty much every single course that we teach. The 3-bar play is covered. We even have multiple videos up on YouTube channel you can watch on 3-bar play. Again, that's our entry, get in above here. That's our stop loss right over here. Boom. Who cares what the company is even called? Right? That's why I didn't even put the name of the company here. Doesn't matter. They're all tickers to me, right? A lot of times I'll trade stocks, I don't even know their name, right? Like the other day I was trading the stock KL. I don't know what it's called. I don't even know what the company's called. I just know it's KL. It has a pattern here. We buy it here, put our stop here, and it goes, right? So for me, I just think of all these things as tickers, the symbols. I don't know what their company name is, what they do. I could care less. All I know is this is my entry, that's my stop loss, and that's my target. Okay? So again, just to summarize, guys, because this course, as I said, is 3 hours, and we've already gone an hour and still haven't covered half of it. So I'm going to go over this couple slides here, and then we're going to see what we can do. So every good technical trade has 3 things, okay? It has an entry, it has a stop loss, and it has a target, as we talked about. 3 things. Without any of these things, there is no trade. A good trader knows exactly how much he or she is risking before they ever take a position. Okay? This is called money management. It's imperative to your success. Yet many fundamental traders don't have these protections in their plan. They simply wait until the pain is so great that they can no longer hold on to their position, and then they sell. And that's what causes these fear bottoms, right? Average person doesn't know what they're doing. They panic. They sell it right at the dead low. And that's where the technicals come in. We see the increase in volume extended from the moving average. We look to buy it exactly when they're selling, right? So think about the crash of 2008 when the market lost 40 to 50%. Most average investors sold right at the dead bottom, only to watch the markets go higher on a 6 to 10 year bull run. Right? By the way, the bull run is still going, guys. Still going. The market's about to make a new high. Nearly tripling in value. A technical trader would have never let a position go 40, 50% against them. We would be out for like oh, it's going down, let's get out here, right? So the technical trading is also known as rule-based trading because we have very detailed, specific parameters that every trade must meet, okay? This is why it's superior to the average fundamental investor every single day. Every single day. But it's a way superior style of trading. Okay? But again, guys, there's so much to go over. I'm just going to go over some trades from today. Again, you can see this there's a lot to go over here. I don't think I can get through the whole course today. Because, I mean, there's just so much going on here. Alright. So, what I'm going to do is, I want to show you some trades from today. Okay. Alright, let's go over to the next trade. Okay, so this is a trade from today. I traded this today, not yesterday, not day before. I traded this today. Here's a trade I took on GE. We shorted it in the morning. Again, this is known as a 3-bar play. We have many videos on it on YouTube. Also covered in every single course we teach. So look at this GE today. This is the daily chart. Right over here, where you see my ball right here, red ball. That's where the GE chart was. Okay. It was finding support here, right? Buyers were right over here. Buyers, buyers, buyers. Can't get it below this line. But then today, on some news, GE gapped down. Right? Gapped down. I saw this 3-bar play in the morning. Red bar, green bar. I shorted right here at $9.44. I put my stop loss at $9.51. And boom, look at this drop on GE. Dropped straight down to like $9.28. I got out at $9.30. Why did I get out at $9.30? Why did I get out at $9.30? Well, check this out. $9.44 entry, $9.51 stop. What's my stop loss, guys? 7 cents. 7 cents is what my stop loss was. And as I said, I only want to make 2 to 1. Okay? I don't look for home runs. You're never going to see me say, oh, I just got $1 million trade. No. I look for 2 to 1. So if I have a 7 cent stop loss, my target's going to be what? 14 cents. Right? So 9.44 subtract 14 cents. What is it? That's 9.30. And that $9.30 is where I got out. I made 14 cents on the trade on a 7 cent stop loss. Okay, so 2 to 1 is what I made. And I think on this trade I had like, what was it? What I had, like 14,000 shares or something like that. I had a lot of shares on this GE trade, right? A lot of shares. So with that, I ended up making $2,000. And then you guys might be wondering, how did you make $2,000 on you only made 14 cents on the trade, right? You only made 14 cents on the trade. How did you make $2,000? Simple. Let's do the math, right? If my stop loss is $1,000, I'm going to pull up the calculator here. My stop loss is $1,000, right? So what's 7 cents divided by $1,000? Oh, sorry, $1,000 divided by 7 cents. 14,000 shares, right? So I took 14,200 shares is what I exactly took. 14,200 shares, okay? So now, if I took 14,200 shares and I lost 7 cents on it, what would I lose? I would have lost $994. That's what I risk. I risk about $1,000 on every trade. That's if it stopped me out. That's what I would have lost. But I made 14 cents on the trade on 14,200 shares. $1,988, right? On GE today. Here's another one I traded today. Apple, right? Here's another one I traded today. Apple, AAPL. I got it long right over here again. In the morning, look what we see. This is the prior day. Look what prior day Apple's been doing. Can't get above it. Can't get above it. Can't get above it. But all this while, look what's happening. Buyers are stepping up. Right? Buyers are stepping up. This morning, puts in a wide range green bar, breaks out. I didn't take it then, I missed it. And then I saw a little shakeout bar come in right over here. Tries to go down, buyers step up, push it all the way back up. That's where I got it long. 197.42. I put my stop loss right under here, 196.94. Okay? And look at what Apple did. It went higher, consolidated, formed another pattern, a bull flag pattern. I was still in it. Boom. Look at that run. Went from 197.42, which was my entry, to like 199.50. Okay? I didn't even stay in until then. I was out. Where did I get out? I got out right here, guys. I got out right, actually here is where I got out. So I didn't even stay in for the next big run. I only got out here. All right. Why? 2 to 1. My entry was 197.42. My stop loss was 196.94. Oops, 197.42 minus 196.94 at a 48 cent stop loss. 48 cents into 2. All right, 48 cents into 2. Why does it keep showing 0? That's stupid. 48 cents. Let's try it again. Into 2. 96 cents. So 96 cents is what I need for my target. Add that to my entry. 197.42 gives me a target of 198.38 and 198.38. Right here, I got out. Took my 2 to 1. Right? Because had I stopped out, I probably would have lost $1,000 if this trade did not work. But because it worked, I made what? I made $2,000. Right? I had a losing trade today also on Snapchat. But again, this is what I'm trying to say. GE winner, 2,000. Apple winner, 2,000. I had another losing trade this morning. I lost 1,000 on it. Right? But look what happened. Made 4,000 in these 2 trades. Lost 1,000 on 1 trade. Net result, end of the day up $3,000. Make sense? Here's some more examples. Nice daily chart, right? Can't get above it, can't get above it. Same exact concept, guys. You guys probably learned it all by now. Can't get above it. What are the buyers doing? Buyers are stepping up. Gaps up above the sellers. Next morning, we get the same setup. Entry, stop loss, target. Here's another one. Sellers are right over here. Can't get above it. Buyers are stepping up. Right over here. Entry, went to above the breakout. Stop loss goes right over here. Pops up. Target. Okay. Here's another one. Can't get above it, guys. Buyers are stepping up. Breaks out. 3-bar play. Entry. Stop. Target. See that? Exact same thing. Now, do we really need to know what the CEO is doing? Do we really need to know what the news says? Do we really need to know what your brother thinks? Do we really need to know what your mother or father thinks about this company? Do we really need to know anything? We know buyers are stepping up. Sellers are right here. Sellers are going. It's going to go up. Simple. Okay? Simple. Here's another one. This is where the sellers were. Okay? Gets above it. No entry though. Pulls back. That resistance area turns into support. So the way you think about this is like, what's resistance at one time? When it breaks it, on the way down, that resistance becomes support. Same thing if you break a support line on the way back up, that support becomes resistance. Right? So the way you think about it is like there's a ceiling, right? You are standing over here, okay, and that's the ceiling. You somehow climb the ladder, right, and you get above that ceiling. Now what happens? Now that same ceiling turns into the floor. That's support and resistance. So here, pulls back down into support. This is called a buy setup. It's covered in our courses that we teach, buy setup strategy. You buy the buy setup, goes right back up. Okay? So that's simple enough, right? Is everybody following? Everybody following? Let me know. Is this helpful so far? Is this helpful so far? Are you guys learning something new? Great. Yeah, so the entry is going to be, there's 2 ways to enter this trade. One is obviously you enter above these bottoming tails, right? The other will be you wait till it gets above, gets a shakeout bar, and then you could buy the breakout above here. There's 2 ways to get into this thing. There's actually a third way too. Third way is again, same here. Get that same pattern. Buyers are stepping up. Buy it here. Now, I want you to notice one thing, guys. All throughout this course that I'm teaching, I have never even mentioned a name of a pattern, right? Because once you, as I said, once you learn how to read charts, once you learn how to read the price action, doesn't matter what the pattern is called, right? I know some people make it fancy, bull flag, bear flag, or some people might make their own name. Oh, this is a textbook XYZ buy setup. This is a textbook XYZ sell setup, right? But have you noticed that all throughout what we've covered today in this hour and a half, I've yet to mention a name of a pattern. Because once you know how to read charts, it stays with you forever. Okay. All right. Here's another one. This is a short trade. I want to give you a different flavor. Look at this. Stock goes up. This is what we talked about in the beginning of this session. Look at this. Extended away from the moving average, right? Extension away from the moving average. Volume peak. We talked about all of this in the beginning of today. Volume crescendo, peaking volume, extension away from moving average. I actually shorted it, and then we get a topping tail candlestick pattern. I shorted this thing right over here, put my stop loss right above it, right? Extended, pulls back. Quick, $1,225 in 10 minutes. Okay, those are my fills right over here. So again, simple technical analysis. That's my only goal, and everybody's goal here at Live Traders is to teach you how to read the price action, read the emotions, read the charts, right? And simple common sense trading without any fluff. Okay? So I hope you guys, learned something there. And here's another example. I'm going to give you a couple more examples. Another example. Can get above it, can get above it. Now it's almost like, it's like clockwork, right? It's like clockwork. Can't get above it, can't get above it. Buyer just stepping up. Oh, breaks out. Great. Either buy the breakout. I missed the breakout. We get a Live Traders buy setup strategy right over here where the resistance now turned into support. This is the buy setup right out of our PTS courses and the TTE course, right? We see igniting volume right when it's breaking out, showing commitment from the buyers, right? Descending volume as it pulls back. So it's a controlled pullback. It's not aggressive selling. Aggressive selling is going to be like this, and you're going to see high volume at the end. This is controlled selling. It's just a pullback, right? Comes back down. Buyers step up again. Stock continues higher. Volume starts to peak a little bit as it goes higher. That's exactly what you want to see, right? Again, just to reaffirm, we need three things: an entry, a stop loss, a target. Entry, stop loss, target. So here's a quick quiz, guys. Very easy quiz. Okay, very easy quiz. What are the three things you need? Anybody? Let's see if you got it. What are the three things you need before you get into any trade? Quick. Good. Good, so you're getting it. So yes, we need an entry, we need a stop loss, we need a target. Good. Good. I'm glad to see you guys are following along. Right? Those are the three things we need. We need an entry, we need a stop loss, we need a target. Once you have that, that makes a trade. Okay? That makes a trade. All right. Cool. So this is again talking about tracking. So in the trading room, we track all our trades. So this is what you want to be an organized trader, right? So you need to have your track results. What's your average winner, average loser, win rate, loss rate? What did you make, right? And we track everything in R units, as you guys know. Like a minus 1 hour loss will be, again, you lost 1 hour, 2 to 1 you made, right? So you always track it. Super important. But again, today we don't have too much time to dive into it. It's already, it's 8 o'clock, guys. Jeez. It's 8 o'clock already. We've been going an hour and a half. Okay. So again, there's a lot to cover, but I don't think I can get to it all because I do have a meeting to attend to soon. And I've got to have dinner. I'm super hungry. But before I close out for the day, I just wanted to, thank you guys for attending this presentation, right? And keep in mind that this is just merely like a sample. This is like 1/15th or 1/100th of what's actually covered in our PTS course, right? PTS course is over 600 pages in length, and this is just merely a sampling of the teachings, okay? And obviously, if you're serious about becoming a professional trader, it's obviously recommended that you learn the ins and outs of technical analysis, which is provided in our Technical Trading Essentials as well as the PTS course. And here at Live Traders, I understand that not everything can be learned in a book or a seminar. So we put together obviously a real-time chat room where we trade live each and every day by showing our level 2, our scanning techniques, our watch list, P&L, and a lot of educational content. Every Wednesday in our live chat room we have a lecture, right? So this helps traders not only to gain personal experience, which is important, but also do it while watching professionals trades live, right? The ability to ask questions along the way is super important. And I feel that, traders tend to get better and learn more quickly when they've learned, and they can execute in real market conditions. So, and our goal obviously here is to be totally transparent with you guys. We're teaching you high quality technical analysis, right? Which you're not going to learn in any other course. I can guarantee you that, right? You're not going to learn what we teach in any course. It's really high quality, and we won many awards for the courses, and it's known one of the best courses in the industry. We actually have many, 4 of our students, to be precise, that now run their own hedge funds, right? And they started with the PTS course and the Technical Trading Essentials course. They have their own hedge funds. If that's something that you aspire to do, that's definitely open to you as well. All right. So just a little bit about us. So Jared's also in the house today. I'm also here. I started trading in 2010 and obviously lost a lot of money until I figured out the statistical edge part of it. And that's where I quickly gained traction, and I made money trading the markets. And then obviously I used that money to buy like real estate and a bunch of other businesses. So trading is a really good way to make money and generate income. And then you can take that income and do whatever you want with it. You can open businesses, you can buy real estate, you can continue to trade. There's a lot you can do with it. And Jared, as I talked about, he's the guy who brought me into this world and kind of taught me how to trade the markets. And I mean, he's taken, you guys probably have seen the webinar on YouTube. I mean, he's taken $2,000 and turned it into $100,000 in like 1 year. And not once, not twice, like multiple times. Okay? So that shows that anybody can do it, even with a small account. And our goal with live traders is just to help, misguided and uninformed traders. And just to, take out the fluff. Okay? And just kind of give it to you real, what you need to know, meat and bones. So obviously with every webinar, we do have, an offer for you, right? This is for somebody who's serious. Now, if you're not serious about the markets, you're just dabbling in, that's okay. That's totally fine. I thank you for coming in, right? Appreciate it. Thank you. Good job. Now, for those of you who are obviously looking to take it to the next level, you're like, okay, this seems interesting. You're definitely going to want to enroll in the course, right? You're definitely going to want to enroll in the course. So today's offer, freaking badass offer, we've never actually done this before, never offered this before, is you're going to get our whole 10-hour video recorded Technical Trading Essentials course, right? 10 hours of video recording, unlimited times you can watch it. It comes with a 200-page manual, right? You're also going to get this whole course that we taught today. And today I only covered like 1/10 of the course. So I'm going to give you the whole course, Trading with an Edge course that we were talking about today. I didn't get a chance to finish it, so you're going to get that included. You're also going to get the trade tracking spreadsheet that I showed you, because it's super important to track your trades. Without the correct tracking of trades, you're not going to know your edge. You're not going to know your statistics, right? So I'm going to give you that trade tracking spreadsheet in order to help you do that. And what I'm also going to do is I'm going to give you email and tech support for a whole year. So you can email me, you can email Jared anytime you like for a whole year. I'll answer emails. Okay, I'll give you 1 month of the swing trading newsletter, so you can actually watch us use the exact same strategies that you learn in the course and actually apply it in trades. And we're going to show you how we beat the market every single year, right? This year we're aiming for, what are we aiming for, Jared? I think this year we're aiming for 60%, right? We're already up 10%. Already. It's only April. We got a whole year to go. So I'm going to give you the 1 month of newsletter for free. Right? I'm going to give you even the 1 month of the chat room, because I don't know if you're a long-term trader or if you're a day trader. So if you're a long-term trader, I'll give you the newsletter. If you're a day trader, I'll give you the live trading chat room for a whole month that you can come in, trade with me, Jared, live every day. And today we did the GE short for $2,000, Apple short. You're going to get to watch us do that in real time in front of you every single day for a whole month. I'm also going to give you trading psychology audio recordings, because mindset is super key to your trading. And as I said in the beginning of the session, without the correct mindset, you're not going to have a good chance. So for me, when I started trading, I really struggled with my mindset. Like, I struggled from holding my winners to target. And I struggled from getting out of my losers because I had a big ego. So I saw like a clinical hypnotherapist, like whole psychology worked on it. So these recordings are the actual recordings that I used for myself. So all that, if you were to buy it individually from the website, I mean, it'll cost you $1,529, right? Today, because again, as I said, I hope you guys learned something. Again, you don't need to buy. Feel free to welcome to come in tomorrow's workshop. You don't need to buy anything. I still love you, all right? I'll still be here for you. But if you're here to want to take it to the next level and you're like, all right, I got it. It seems like something that's interesting to me. Then you could definitely sign up for this special at only $497. Only $497. So you're saving $1,100 and something dollars from the usual price. So if you're interested, I would definitely take advantage of that deal. Evan just posted the link here for the special. Let me go ahead and post it on YouTube also. All right, so the people watching on YouTube, you guys can check that out if you're interested. So if you're interested, you're definitely going to want to sign up for it because you're going to love the course. I can tell you that flat out. We've had not a single person in our, since we've been running Live Traders for 4 years. In 4 years, I haven't had a single person ask for a refund. Not a single person ask for a refund. I haven't had a single person email me and say I didn't learn anything. Not a single person. Not a single person. And I also don't have any single person who's taken the course that isn't making money. Not a single person. So I'm totally, guaranteeing you that you're going to love the contents of the course. You're going to learn a ton. And you're going to be definitely a triple threat to the markets. You're going to learn simple technical analysis techniques with exact parameters of where to get in, where to get out if you're wrong, where to get out if you're right. Every single thing from A to Z is covered, right? So that's the offer that I have for you today. You're definitely going to love it, and you're definitely going to want to take advantage of it. And just like countless others have, done well with it, I'm pretty confident that if you have an open mind and you have the willingness to learn and you actually do what you're being taught, one thing I can guarantee you that you're never going to need any other course ever again. I guarantee you that, right? PTS, obviously, yes. But apart from that, you're never going to ever need any other course ever again. So just wanted to take a quick moment to thank you guys for tuning in today. I hope you guys learned a ton. Here's where you can follow us. If you go to, this is our Facebook page. Post a lot of good stuff on there. Videos, content, charts, right? And that's our Instagram account. That's Jared's. Mine's Delta90. So if you guys want to stay in touch with me on Twitter or Instagram, this is my handle right over here, Delta90, NINETY. Same on Instagram, same on Twitter. We can be in touch over there. And you can email info@livetraders.com. If you have a specific question for me, you can email me directly at my first name, Anmol@livetraders.com. And if there's any questions you guys have about this program or anything at all, I'll definitely be happy to answer that. So what I'm going to do is, for a quick minute, I'm going to hand it over to Evan so he can go a little bit more about the program with you. And then after that, I'm happy to stay on and answer any questions. All right? So Evan, are you ready? I'm going to hand it over to Evan, and then after that, I'm going to come back on for the Q&A. Thank you, guys.
Thank you so much, Anmol. Guys, if you really enjoyed that, put an exclamation point. I can listen to him for hours, and we just gave you the ability to do just that. Over 10 hours of video on just that one item. We started doing bundles a while ago, and they're just amazing because they have so many different things. Not only do you get to learn, like the TTE, the Technical Training Essentials, you will get to learn the entire thing, but then go into the chat room and watch Jared and Anmol trade live. They're going to give you the entries. They're going to give you the exits. You can do, now I'll tell you, you're going to be a much more profitable trader if you learn how to do this with everything Live Traders gives you. I wish I had had this at 18. I'm 38 now. 20 years ago, I started trading in the stock market as soon as I could at 18 years old, open an account, and my first trade was NVIDIA. I don't know if you guys remember NVIDIA. It was a software company, and I traded purely on fundamentals. Honestly, not even fundamentals. I traded because I liked the company. I played video games, and they made these cool graphics chips, and I made $2,000 in about a week off of that trade. I thought I was just it. I mean, that was it. I was never going to have to work. I was going to trade my entire life. And what do you think happened? One guess what happened the next 3, 4, 5 years. I lost thousands, tens of thousands of dollars because I didn't know what I was doing. If I had this training at 18 years old, who knows? Who knows? But guys, you have the opportunity tonight. Right now, it's a one-time deal. They did a bundle at Black Friday, and we created a monster. And all of the items, we try to make the most value possible. Amal and Jared, like, I've never known guys that trade for the sake of training. I mean, their heart is training. You guys, you just listened over an hour and a half to Amal just training from his heart. He trades every day. You saw that he made the trades this morning, made really good money. He will continue to do that every day. He and Jared are both in the live rooms. So if you guys want to watch them, not only can you watch them trade, but they're going to give you their watch list. Jared gets on before. I've been in this trading room with him before, and he would just give you the watch list, all the stocks that he's watching, the entries, the stop loss, the targets, what they're going. I mean, you can do one of two things. You can be an active trader, and you can learn all of this. You can learn the psychology behind it. You can learn all the patterns that are in all these courses, and you can make money. Or you can do the other thing and just watch them trade and kind of paper trade, demo trade with them. You're getting in this bundle, you're getting an entire month free of not just a live trading chat room, but also the Swing newsletter where the wealth building. So some of you guys, hey, I work every single day. I work 5 days a week. I can't trade live. Well, then get the Swing newsletter that's part of this whole bundle that they're offering tonight, because it's amazing. They give you what to look for over the next few weeks. So if you can't be in trading at 9:30 when that bell rings, then do the swing trading, and you'll learn so much from these guys. It is amazing. I've been learning for months from them, and it has made me a better trader. I just, if you want the best of the best, like I said before, if you guys were at the beginning of this webinar, this web class, if you're at the very beginning, I told you that I have spent thousands and thousands on courses, been in other live chat rooms. There is nothing like livetraders.com, I promise you. And those of you who are in it, some of you guys, I recognize the names here, some of you are in the live courses. You know that to be true because it's just more of this heartfelt training and trading right next to you with their real money. Anybody has any questions, feel free to pop them in there. I know Jared and Anmal are still here, and they can answer your questions. They're also answering questions on YouTube for those that are watching live there.
So I got a couple minutes. If anybody has any questions, let us know.
Go ahead.
No, it's all right. I was just pulling up. So thank you, everybody, for tuning in. If you have any questions, you could definitely drop it in an email. But again, just wanted to go over that with you. Live traders, I'm here. I wear my passion. I know some of you still want to sign up for the next. This is the 5-day event. I'm going to drop that link in here in just one moment for you in case you want to get the Forex training tomorrow, the options training on Wednesday, the mindset psychology on Thursday, and the Q&A with Jared and Amal on Friday. I'm going to drop that link. All right, so have a good one, everybody. Feel free to email us with any questions. And thank you guys for tuning in again. See you tomorrow, same time. Same time tomorrow, Forex training. Make sure you signed up for it, though.
For those of you still here, there's still 18. That is the link to sign up for all the different days. It is deals.livetraders.com/livetraders-triple-threat-main.